Breaking economic news, the Canadian Real Estate Association has just released the latest snapshot on the housing industry in Canada. Scott Peterson is watching all of that for us. So how does the housing market look?
It's looking like it's creeping back, and this is according to the Canadian Real Estate Association. Don't forget that they are in the business of selling real estate, but they are seeing sales since April up about 17% from the doldrums back then. So we are seeing it again month over month, up about 2.8%. So these are positive signs that the housing market is still chugging along. CREA does point out, though, that there's economic certainty involving the U.S. tariffs continuing to scare away buyers getting into the market. But overall, we're looking sales up about 2.8% month over month. Year over year, they're now positive about 3.5% over this time last year. But prices, however, continuing to be soggy, down about 1.5% year over year since last June. And the average home price about $691,000. There's also a rising amount of unsold homes in the market. It's now about 206,000. That's up about 11% year over year. So overall, CREA says that there's a lot of fear out there, a lot of uncertainty with our biggest trading partner, and that's south of the border. That's news that we're dealing with every single day.
Continuously kind of coming out in little bits. We're also getting some inflation numbers. Now, those sort of in line with what was expected, but what's the impact on the markets? Yeah,
the impact on the markets are they're trying to gauge when interest rates are coming down. So this doesn't give a lot of wiggle room. We're looking at a 1.9% rate in June, ticking up pretty much exactly in line with expectations. But the trend here is that inflation is rising. This is making it difficult for the Bank of Canada, when the next be at the end of July, to lower rates in an environment of raising inflation is not generally done. Same with the U.S. The U.S. market is at 2.6%, with the U.S. Federal Reserve in a tough position to lower rates in September. So this is what the markets are reacting to. Let's take a look at the price of oil, up about 50 cents a barrel. We've got the Canadian dollar, the euro, the British pound, a little bit positive against the U.S. counterpart. And let's get to the markets. They opened up in mixed territory. We're seeing the TSX slightly to the downside, with the Dow Jones, the S&P, and NASDAQ sort of wandering off in different directions, but it all has to do with interest rates and the potential of the U.S. Fed or the Bank of Canada lowering rates, and they don't see it from these numbers today.
All right, Scott, thank you so much.
Thanks, Crystal.